Can crypto be regulated? While the U.S. cracks down on trading platforms by suing Coinbase and Binance, Hong Kong is now legalizing retail crypto trading. But how will the currency be regulated under one state, two systems? And can the U.S. avoid another FTX-style scandal? I'm Andrea Sankey, and today's newsmaker is crypto. In an escalating crackdown on crypto exchanges, the U.S. Securities and Exchange Commission has filed lawsuits against two trading platforms, Coinbase and Binance. The SEC accuses Binance and its CEO of operating a web of deception. Another lawsuit is against Coinbase. The SEC says that platform traded at least 13 crypto assets that actually qualify as securities and should have been registered. Coinbase suffered an estimated $1.28 billion of net customer outflows since the suit was announced. If successful, these lawsuits could transform the crypto market by successfully asserting the SEC's jurisdiction over the industry. For years, the industry has argued that tokens do not constitute securities and should not be regulated. But the SEC says failure to regulate is a danger to consumers.
This is a field that's built, the whole business model is built on non-compliance with the U.S. securities laws. And we're asking them to come into compliance, and they're going a bit of catch us if you can. That's a sort of generalization. And they're commingling various functions that traditional finance we don't allow. I mean, the public would be aghast if they thought the New York Stock Exchange was also running a hedge fund trading against them, or allowing wash trading, or lacked controls to protect against fraud and manipulation on the platform. And so the conversations have been constructive, but it's also about them bringing a business model into compliance.
Now, Binance, the world's largest cryptocurrency exchange, has called the SEC lawsuit unwarranted and says it's the SEC authorities that have refused to provide clarity.
From the start, we have actively cooperated with the SEC's investigations and have worked hard to answer their questions and address their concerns. Unfortunately, the SEC's refusal to productively engage with us is just another example of the Commission's misguided and conscious refusal to provide much-needed clarity and guidance to the digital asset industry.
Now, across the ocean, Hong Kong is taking a totally different approach. On the 1st of this month, they introduced a new regulatory regime for virtual assets. This allows retail investors to trade major digital tokens at licensed crypto exchanges. The new rules were announced in May after a consultation process with industry stakeholders. They require exchanges selling or marketing cryptocurrencies to obtain a license with the Securities and Futures Commission after a one-year transition period. Now, it's believed that this could be a testing ground for mainland China to do the same in the future.
Hong Kong is an international financial center. So what we are trying to do is in line with an emerging global consensus that, first of all, virtual asset is going to stay. And secondly, in itself, despite the potential risks involved, also carries with it fundamental value in terms of enhancing efficiency in economic ecosystem or treatment or payment systems, etc. So for these positive elements to be harnessed, these activities have to be allowed in a regulated way.
So while one financial power looks toward a future involving crypto, another is cracking down on it. Joining me now to help us understand crypto's future are from Singapore, Anndy Lian. He is an intergovernmental blockchain advisor and the author of NFT from Zero to Hero. From Texas, Vanessa Harris is a product leader and Web3 advisor. And in Hong Kong, we have China strategist Andrew Leung. Thanks all so much for being with us. Let's start with Hong Kong. And Andrew, you can tell us how this actually makes sense, given this trading is banned in China, but now legal in Hong Kong. I know there are one state, two systems, but is Beijing looking for ways to integrate crypto then into the mainland economy as well?
There are a number of major developments behind this move. Firstly, the the internet ecosystem is undergoing a dramatic transformation. The so-called Web3 is happening, where data systems are more distributed and is driven by blockchain. And this is a completely new ball game. Of course, there are risks, huge risks, as exemplified by the FTX meltdown. But on the other hand, a lot of lessons have been learned. And for example, Hong Kong, of course, is the world's major financial center. It doesn't want to fall behind, for example, Singapore, which is also allowing this to happen. And of course, the Hong Kong administration has been studying all the dynamics and can see the future developments there, where blockchain is driven not only the crypto market, but also the digital currency. Of course, the digital currency is of strategic importance to China, as the renminbi seeks to decouple from the US dollar.
Right.
Now, there are a number of major safeguards involved, for example, making non-compliance a criminal offense, along with other measures, for example, know your customers, safeguards, security guarantees,
but
and
quickly,
risk
Andrew,
and review
should we
committees and so on.
expect Beijing to start loosening that ban anytime soon?
No, I don't think so, because it's early days yet. I mean, it's only 1st of June that Hong Kong legalizing this, and still trying to experiment with this, just watching out for any pitfalls, strengthening the regulations where necessary. And in the beginning, as I said, putting all the necessary safeguards, including making non-compliance a criminal offense.
Fair enough. Let me turn to Vanessa quickly. I mean, we heard Web3 dropped there. You know something about that. But quickly, Vanessa, I mean, why is Hong Kong then a good location for crypto retail trading?
Well, I think in general, Hong Kong's been at the forefront of finance, even in traditional financial areas. It's been a financial center for the world for decades now. And so I think it just makes sense for them as kind of a jurisdiction to allow some of the newer financial assets to be freely engaged with and traded. You look to the future of tokenization of assets, where even things like real estate or bonds and other things will be tokenized on the blockchain. It makes sense for Hong Kong to be at the forefront of this. And, definitely, Andrew was mentioning Singapore as a place that's pushing ahead. I think there is an advantage here to be gained from jurisdictions that lean heavily into legalizing, creating clarity for a lot of these assets, and ensuring that the industry can flourish rather than trying to stop the industry from flourishing. And so I think that's important, especially as you look at what's happening in the United States right now, where the SEC is not providing that level of clarity. The companies are going in like Coinbase and saying, please tell us what is the security, how to comply, and they're not getting an answer. And so a lot of those companies are going to shift to jurisdictions like Hong Kong. They're going to bring the talent and the capital into Hong Kong. And so I think it's a very good move for them.
Interesting. I want to come back to you in just a second about what Coinbase had to say. But Andy, let me come to you. I mean, tell us what you think. Andrew mentioned that there is an eye on Singapore and what it is getting out of its, having the crypto market on its territory. So what do you think China could actually get out of this? And in the long term, do you think China wants a digital currency as well?
I think the stand for China has been fairly straightforward. They are very technology-centric. So they look at blockchain technology as a form of growth, as a form of maybe even a productivity technology, right? So for China itself, I think they are very clear on the technology. But also at the same time, I think what Hong Kong is experiencing right now at this current moment, it seems like, maybe China is treating Hong Kong as a form of sandbox, for them to trial and error and make sure that, all these teething issues are going to be resolved. Whether it's going to be a KYC issue or it's going to be an AML issue. I think Hong Kong is definitely here to help China sort out a lot of these questions, And again, I think I think what is happening right now is actually a very good thing because this shows that the industry is maturing. You can see that more projects are looking at the Asian narrative right now. U.S. folks are relocating themselves into Hong Kong, and then relocating into Singapore, during the COVID period. I think this is a very good way to push cryptocurrency to the next level for all of us.
Okay. Vanessa, I'm going to come back to you because as for the United States, Binance and Coinbase have both said that it's the SEC's fault. They say they cooperated, but the SEC filed suits anyway. Is there some suspicion that the SEC might be trying to bring down kind of the crypto industry because they don't know how to and really can't regulate it properly?
I think they're treating it as a political football. And essentially, they're not allowing the innovation to flourish. They're not giving the guidance for what these centralized exchanges would need to do. So, for example, it was a few weeks back that Coinbase actually sued the SEC to try and get guidance for how they should conduct their business. What is a security? Which assets are securities? And the answer the SEC came back with was, no, we're not going to tell you. Which is just crazy to think that there's a regulator doing that. And so there are some suspicions in the industry that it is linked politically. We know that some very prominent senators like Elizabeth Warren have threatened to gather an anti-crypto army. At the heart of it, I think, is this idea that cryptocurrencies, and especially as you lean into the decentralization of blockchain, is unstoppable. It's permissionless. It's not something that the government control. And it's something that makes a lot of people in power very, very uncomfortable at that level. And so we're starting to see that play out. We'll see where it goes. We've got two presidential candidates in the U.S., both Robert Kennedy as well as Ron DeSantis, who've come out very strongly in favor of the crypto industry and of Bitcoin. And so I think that there's unfortunately going to be politics in this as well.
Vanessa, I have to stick with you because I need to go back to the other side of this, actually. There's the crypto industry itself. I mean, the whole point of crypto is that it was not supposed to be regulated, because the SEC and the Fed had failed the people so badly, they believe, in the 2008 financial crisis. Crypto was supposed to be the alternative to getting around the corrupt banks and the regulation that they saw as this massive failure. So are these platforms now kind of trying to have it both ways?
So I think, in terms of the platforms, there's two aspects to consider. One is crypto and blockchain itself. So Bitcoin, as you say, was birthed in the shadow of the financial crisis as an alternative to the traditional system. And there's many people that live outside of the traditional system. They do peer-to-peer trading, whether it's in Bitcoin or Monero or other currencies, and they're actively trying to decouple from it. A lot of these centralized exchanges realize that there's an asset class that can be a profitable trading environment that's outside of the kind of ethos and fundamentals of crypto. And they've offered this to retail consumers right now. That doing the full decentralized access to some of these tools is more complicated than just logging into Coinbase and buying some Bitcoin.
Right.
And so I think that's where they're trying to bridge the gap, is to give people exposure to these assets without exposure to the entire ecosystem necessarily.
Okay. Andrew Leung, I'll come back to you. I mean, it is a bit sad because you talked about China really looking at this technology in itself. And it is a bit sad that the scandals, around crypto have not been about the technology itself. The technology over the years has kind of, proven itself pretty foolproof, but humans trading it have not.
Well, you're quite right. I mean, the technology is there, and a lot of people understand the technology, blockchain, with wider applications, and you've got fungible sort of digital assets or non-fungible digital assets, and so on and so forth. So there's a part of the whole new ecosystem. But then the dramatic failure of FTX suggests that you just can't let something like this completely new, completely unregulated, going on the rampage. And as evidence, I mean, this caused tremendous repercussions the world over. And this suggests the need for a kind of framework. But it doesn't mean that the framework doesn't have to control everything. Within the framework, then blockchain can flourish, and crypto can be regulated and watched and progress. So that's why the Hong Kong government is now imposing a great deal of rules and regulations Still, this is early days yet, but these rules are pretty stringent, controlling key sort of pathways,
Okay.
which can lead to problems in the future.
Vanessa, I could see you disagree, but let me come back to Andy first. And I need to ask you, I mean, how vulnerable, if I can put it that way, are crypto investors? Because, I mean, shouldn't they understand what they're getting into on such a platform? And a lot of people consider crypto trading a sort of casino anyway. So would you consider consumers vulnerable the way the SEC is kind of describing them now?
I think SEC from US, they have always been taking a rather strange stand. But to me, I think the way to move forward is to really determine, what exactly security means to them, and how are they looking at each and every coin. Why would the Solana be a security, but then Ethereum is not a security, right? So I think all these things got to be defined very properly from the US SEC. And again, I did mention many times on several articles that I have written. The Howey test is a 1940s a piece of paper, and I don't really think that in the current context, especially, it is really that viable, because there are four different tests that we are looking at, the four different factors, right? So whether there is an investment of money, or not, whether there's any sort of any asset built on its project, there's a lot of different kind of detail, that goes into what we are talking about in terms of security. So to be real honest, I echo what Vanessa has mentioned, but also adding on to another layer, right now SEC is only looking at things that are more centralized. If they are not able to cope with all these centralized issues, centralized exchange issues, how are they going to regulate decentralization? How are they going to regulate what we are trying to do on the Web3 platform? So I think there must be a certain good balance between what US SEC is trying to impose, stopping a lot of different innovation, versus what is already happening on the ground. I just want to really, share a little bit more. I started to give advice to government, as early as 2017. The kind of knowledge that was shared back then and now, there's a huge difference.
Okay.
Government are beginning to understand a lot more, but also at the same time, they are also trying to catch up with what we are trying to do on a more decentralized manner. So again, I hope, US SEC, or whether it's going to be Hong Kong, Singapore, let's come up with some form of standard, scorecard that we can all agree upon, and move the industry forward,
Okay.
because we are not going to stop, anyway.
Yeah, Vanessa, let me ask you this. I mean, in your opinion, how should crypto ideally work if you had the magic wand? I mean, we do not want another Sam Bankman-Fried and FTX, but then again, the original purpose of crypto was supposed to be this independent, completely alternative currency. So how should this go?
Well, I think there's something important to realize, that a lot of the big failures and frauds that we've seen from, Sam Bankman-Fried is the prominent example, they're breaking existing laws. There's no new laws that are needed to hold these people to account. And a lot of the failures have been in centralized exchanges that very much mirror, the banking system that we have today. One thing that is worth noting is that during the crypto collapse that happened last year, many of the decentralized protocols like Aave and Compound and Uniswap kept going. And the reason they kept going was because they were governed by code, not by people who are fallible. And so I think ideally from the crypto perspective, the ethos is really about holding your own assets and being sovereign of your own assets. And so you'll hear the phrase, not your keys, not your coins, which basically means that if you hold your assets, no one else can come along and mess with them. And so I think ideally from my perspective, there would be a way to on-ramp where you had self-custody of your own assets, where you were responsible for your assets. You look at some banking failures recently that happened in the United States. Silicon Valley Bank, one of the largest banks in the country, went under. and people's assets were trapped in there for a period of time. Now, we had government step in, but that's pointing to a failure of the entire banking system. No one can take your assets if you have them yourself in your own custody. You don't have to depend necessarily on a bank. And so I think ultimately that's where we need to go as an industry, is to give people that ownership over their own coins.
Okay, Andrew, let me ask you if what Vanessa is describing would be viable in China and Hong Kong.
Well, I think Hong Kong, of course, has been a world financial center for a long, long time. I think that the Hong Kong government mostly wants to ensure is the security of the system, and then controlling the risks, minimizing the risk, and together with robust preventive measures. Now, as far as China is concerned, of course, it's trying to learn from what's happening in Hong Kong and see how Hong Kong's succeeds or otherwise in managing some of the problems facing the industry. But there is an additional strategic dimension as far as Beijing is concerned. And that's the lessons learned could be extremely useful in the development of China's digital sovereign currency. Of course, sovereign currency is not a Bitcoin, but the blockchain technology and the lessons learned could be useful for China to push ahead with its digital sovereign currency, the Yi-renminbi, which of course is strategic in the sense that it's getting away from the weaponization of the US dollar worldwide, and it would push influence globally.
Okay, I saw both Andy and Vanessa take a deep breath. Vanessa, go quickly. We're down to our last few minutes, so quickly your response, and then to Andy.
I think the central bank digital currencies that Andrews are describing are a deep concern, and antithesis to the ethos of everything that is Bitcoin. It allows the government to turn your money off, to give you restrictions like how quickly you need to spend your money. It's a dystopian nightmare, and I hope very deeply that we can avoid that.
Andy, are you on the same page there?
That's slightly different, because in order to really get the government to buy into all these new regulations, I think CBDC, for example, helps a bit in terms of giving them some assurance and, of course, guiding them where to tax. So I think CBDC is actually kind of interesting, honestly.
Okay, let me ask you this, Andy. I mean, what is your greatest fear? And Vanessa, I want you to take this too because you're US based. What's your greatest fear as far as the SEC and future crypto regulation is concerned? How will it change what was supposed to be the soul of cryptocurrency?
I think I think this is a multiple reply kind of question. I felt that number one, SEC right now, as mentioned, they are only looking at things that are more centralized. So what the fear that I have right now is that they are able to find ways to attack all the exchanges, you know, and then try to get some kind of dirt out of it. Because to be very honest, as you know, in any of these financial systems, or whether it's in a cryptocurrency exchange, there are definitely dirt that they can dig out. So I'm more worried about that. You know, if they are willing to go like 10 times more detail into their findings, there are bound to be things that they can affect the industry. But also at the same time, because they are spending too much time in the centralized exchanges and all the different issues, what I do see is that, and what I do hope is that I want to see Web3 and decentralization going a lot faster than it should be, more adoption. And that will level up the playing field for everybody.
Okay, Vanessa, quickly, your thoughts, and also if you could mention, do you think Binance and Coinbase can actually beat these charges?
So my thought on the SEC is that the thing they can do with manipulating the markets is to change the price. They cannot stop Bitcoin from producing the next block. In fact, no one can stop that. So the decentralized systems are fine. My biggest worry and fear is that they lock out most of the retail users from this transformative technology. They turn it into banking 2.0, so their buddies in the banking industry can get rich off of it. I think Coinbase and I don't know as much about Binance, but definitely Coinbase has been above board with everything. They even registered their IPO with the SEC. I think they have a tremendous chance to tackle them in court, and the laws of the US are very much on their side, in my opinion.
And I mean, how will that change the SEC's approach if the SEC gets beat?
Well, I think unfortunately it's going to require a change in administration. This current administration has been very heavy-handed. And so we have that every 4 years. We have this opportunity in the United States. The Supreme Court has also started to get involved at the overreach of some of the administrative bureaucracy. And so we might actually see some of these cases go to the Supreme Court and some rulings come down that actually change the character of what the SEC is even allowed to do.
Very interesting, Vanessa. That will have to be the final word. Andrew, my apologies. We're completely out of time for this edition of the Newsmakers, but I'd like to thank all three of my panelists so much for joining us. Really fascinating discussion, bringing some clarity to a difficult to understand sector of our economy now. So thanks a lot, and thanks our viewers, of course, for being with us as well. Remember, you can follow us on Twitter, and do be sure to subscribe to our YouTube channel. I'm Andrea Sankey. We'll see you next time.